the generally the support lines, and the red lines here are the resistance. If you open up your screen, you should be able to see this. Just checking it out. Yep. So, and under here we have a couple of momentum indicators, stochastic, which is the Williams %R. We also have the commodity channel index overlaid over that. They just have different time frames, which is why they're one's longer, which is the smoother one, which is the %R. Okay. So the CCI, and the one that's more jagged is the %R. I've got a MACD line down over here, kind of hard to see, but when you stretch it out, it gives me a signal. And then I've got RSI and the ATR here on the bottom. And then up here I've got Bollinger Bands. I got some moving averages, and again I've drawn trend lines in here that go back years. Okay, and I just leave them in there. I never take them off. And as the chart moves, as we pick up another day, the chart moves and the trend lines move along with it. Okay, so the important one here that we saw across was this RT3. This is one of the oldest trend lines that I have on here, of course, and this is RT3 was passed about a week or so ago for a second time with a significant bar, and that is setting up as a really good, strong support line. In fact, no surprise here, we see a lot of the moving averages coming in to meet up with that trend line. So what do we know about trend lines? They much like moving averages, they act like magnets, right? So what's happened over the last couple of days? We've really had a smashing of volatility, and as my friend and another colleague who is actually in the room today, I'd like to welcome Bob Byrne and John Heller, who are in the house with us today. Welcome, guys. As Bob would say, it's been about the trade, especially probably this week, especially the last couple of days, has been about as boring as you can imagine. So I'll tell you what, I would tend to agree with him if you're trading the markets, but if you're trading stocks, it's been a little bit different story, I think. Individual stocks, he would agree with you. He's mostly he's a brilliant trader of the E-minis and the futures, and trading the markets he's very astute. So he more gets it more right than wrong regularly. But he would tell you the same thing. It's been pretty shallow. The participation here, the volume, and the effort on price discovery here has been rather poor. So maybe that'll change. Maybe we'll get a little bit of a shakeout. Maybe we'll get some news or something like that that will cause people to move. But in any event, what we're doing is we're just playing stocks and playing individual issues and doing the best we can. So I'm just going to put up a couple of names that we've been playing lately here. Let's see here. The stock that we played early, we got into earlier in the week, and we can see this is the NVIDIA that we bought earlier in the week, and we had this really nice surge, nice breakout over the 200-day moving average. This is the 200-day, and on good volume. And look, it had earnings yesterday, and it's gapping up here really strongly. Let's see a couple of other names that we'd gotten into not too long ago. And again, this was one that we got into. And again, I probably we got into a spread trade on this one, and clearly this thing ran off. We made a good profit on it, of course, because we were in there for the earnings here, and it had a big strong move. But look at the setup here. Look at the setup. This is one of the things I want to show you about. Okay, this is one of the things that you can learn about the reasons why we make trades here. Okay, so what we have is we have a nice little solid move here off of the lows in early June. This is Tesoro. And we held up there in July, and although the markets didn't really correct much in July, this thing pulled in a little bit, caught support at this 20-day moving average, which is the purple line, and it didn't really faze me, the fact that earnings were coming out. Okay, in fact, it got me more interested because of potential of it making a strong move. And while we played it a little bit more conservatively with the spread, we cut our risk down by selling the upside call, and we nearly maximized our gain on that one. And again, in hindsight, it's 2020. We bought that 27 call. It would have been worth $8 today. Who cares? We're not in it to just throw risk out there. So we're in it to play smart.